Accounting 201, Accounting Equation, Take 1. Welcome. Accounting equation, assets equals liabilities plus owner's equity plus revenue minus expenses. Now to develop an understanding of how this works and how it can be used in the course to help you get through the materials, especially get through transaction analysis, which is the main topic of chapter 1. Probably the most important thing, the first thing we need to do is to learn the definitions. And so starting on the left side and moving across the equation from left to right. On the far left we have assets. Now an asset is something that the business owns. It has value or should have value to the business. And that value should be tied directly to that asset's ability to help the business earn income. Moving over to the next item, the next category, the accounting equation, we have the big L, which is liabilities. Another term for liabilities is debt. That might be a term that we're a bit more familiar with in day-to-day use. And a liability or debt is an amount that the business owes. And that amount is usually owed to another business, or it could be owed to an individual or several businesses or individuals. I'm going to skip over owner's equity for a second and come back to that category last. Next category over is the big R, which is our revenue category. Another term for revenues, which is probably a bit more familiar, is income. And so revenues are our income. The income of the business is earned, and earned income is earned generally through the process of the business providing or selling services or merchandise or a combination of both. So again, revenues, that's our income, and our income is earned, and the activity the activity that provides us with earning our income is selling or providing our customers with services and or merchandise. And very closely related to revenues are our expenses. Our expenses, a more often used and probably more familiar term for expenses is cost. Our costs are, just as our revenues are earned by providing services and merchandise, our costs or expenses are incurred. That's a new term, incurred, I-N-C-U-R-R-E-D. Costs are incurred by the business through the buying of services and merchandise for our use in the production of income and in the running of the business. So again, we have assets, liabilities, revenues, and expenses. Now the middle category is a bit more difficult to explain, and probably a little bit more difficult for the average student to understand. But I like to explain owner's equity this way. The owner's equity category shows some key financial information about the business. It shows the amounts that the owners have put into the business, and we call those amounts owner investments. It shows the amounts that the owners have taken out of the business, and we call those amounts owner withdrawals or owner drawings. And finally, owner's equity shows an accumulation of net income and net losses of the business over a period of time. So again, to recap, our assets are items that the business owns, should have value, and that value should be tied directly to the production of income. Liabilities are our debts, and they are amounts that we owe. Our revenues and our expenses are generally why we are in business. Revenues are our income that we earn through providing goods and services. Expenses are costs that we incur by buying and using goods and services in the production of income. And finally, our owner's equity shows us owner investment, owner withdrawals, and accumulated net incomes and net losses of the business. I'm gonna stop here, and hopefully that makes sense. If not, let me know. Thank you.